The world of investing has many paths, but some lead to greater treasures. Let's explore the top 5 strategies that pave the way to financial success. This is Foxfire Finance, and we are committed to spreading the great news and concepts of the FIRE movement to anyone dreaming of a better life. We aim to help you achieve your goals by providing meaningful tips and strategies that will bring you closer to your dreams of financial independence and retiring early. But first, don't forget to subscribe, burn that like button, and ring the notification bell to be updated on our latest releases to guide you on your way to FIRE. From starting early to diving deep into research, these methods have transformed ordinary investors into financial wizards. First of all, let's talk about the magic of starting as early as you can. Starting your investment journey early is like grabbing the best spot at the starting line of a race. And the real MVP in this race? Compound interest. Think of it as your money's secret superpower. The sooner you jump in, the more this superpower gets to work, making your money grow in crazy ways. Imagine this. It's like planting a small seed in your backyard. Give it time and care, and it can grow into a big shady tree. That's your small investment becoming a big chunk of change. It's not all about pouring a ton of money in from day one, but more about letting it hang out and grow over time. Here's the deal. In the money game, timing can be everything. The longer your cash is invested, the more it gets to grow and multiply. So every second you wait might be potential growth you're missing out on. To sum it up, if you're thinking of diving into investing, now's a great time to take the plunge. Trust me, your future self will thank you big time. Up next is to reinvest often. When it comes to maximizing investment returns, one of the most effective strategies is reinvesting your gains, whether they arise from dividends or interest. By adopting this approach, you're essentially allowing your profits to generate even more profits. Consider this analogy. Rather than consuming the fruit born from a tree, you plant the seeds to grow additional trees. Over time, this creates a flourishing orchard, compounding your returns. By reinvesting, your capital doesn't remain static. Instead, it's continually reinvested, which in turn earns its own dividends or interest, magnifying the overall returns. This principle leverages the power of compound growth. Each time you reinvest, you increase the principal amount that's actively working to generate returns. Thus, not only are you earning on your initial investment, but also on the accumulated gains. In conclusion, for those aiming to optimize their investment growth, it's prudent to harness the benefits of reinvesting. By consistently rolling your gains back into your investments, you're positioning yourself for enhanced long-term financial prosperity. Third on our list, the wisdom of investing for the long term. So you've probably heard the hustle and bustle of the stock market. Prices going up one day, down the next. Headlines screaming predictions, and experts offering endless advice. That's what we call short-term market noise. It can feel like a daily roller coaster, and it's super easy to get caught up in it. But here's a fun fact to keep in mind. Rome, one of the grandest cities ever, was not built overnight. It took time, patience, and a lot of persistence. Similarly, investing isn't about quick wins or immediate gratification. It's a marathon, not a sprint. Those who stay in the game for the long haul, ignoring the constant buzz and ups and downs, are called long-term investors. And guess what? They often have the last laughs. Despite the market's wild moods, things tend to even out over the long run. So by keeping your eyes on the price and not sweating the small stuff, you have a better shot at seeing some sweet returns. In a nutshell, don't get swayed by the daily drama. Stay patient, think long-term, and let your investments do their thing. Fourth, the art of diversifying your investment. Ever heard the old saying, don't put all your eggs in one basket? In the investment world, this means you shouldn't put all your money into one type of asset or investment. Why? Well, imagine if you drop that one basket. All the eggs break. Similarly, if that one investment goes south, your entire savings could take a hit. Instead, the smart move is to spread your investments around, a concept known as diversification. By doing so, you're not relying on just one sector or type of asset. If one area struggles, let's say tech stocks, but you've also invested in healthcare or real estate, then those areas might still perform well, balancing things out. A diversified portfolio acts like a safety net. When financial storms come, say an industry downturn or a global economic hiccup,
2020 has been harder than any mom and pop shop could have imagined.
Really taken a toll on small business owners this year financially.
not every part of your portfolio will be effective in the same way. Plus, by spreading your investments, you also open doors to multiple growth opportunities. As some areas of the market share, you're poised to capitalize on their success. In a nutshell, don't risk it all on one bet. Spread your investments, play it safe, and tap into various growth potentials. And last but not least, always do your research. In the intricate world of investing, a well-informed decision invariably holds more weight than mere intuition or gut feelings. At the heart of successful investing lies a commitment to knowledge. One must be acquainted with the assets they're considering, whether stocks, bonds, real estate, or any other investment vehicle. Familiarity with an asset's history, performance, and inherent risks forms the foundation for a sound investment strategy. Beyond the asset itself, understanding broader market trends is paramount. Financial markets don't operate in isolation. They're influenced by global events, economic policies, technological advancements, and myriads of other factors. An astute investor constantly seeks insights into these macro dynamics, ensuring that they're not caught off guard by sudden market shifts. Furthermore, in this ever-evolving financial landscape, continuous learning is not just an advantage, it's a necessity. The pace at which information circulates today is unprecedented. Staying updated, whether through financial news, seminars, or scholarly publications, can be the difference between capitalizing on an opportunity and missing it entirely. In essence, while intuition has its place, the realm of investing greatly favors those who diligently seek knowledge, comprehend market nuances, and remain perpetually informed. Investment strategies are more than just avenues to wealth, they're pathways to a secure future, realizing ambitions, and attaining financial independence. Beginning your investment journey early maximizes growth potential. Smartly reinvesting amplifies returns, and adopting a long-term perspective ensures steady growth. But remember, every decision should be grounded in comprehensive research and thoughtful review. It's not merely about increasing numbers in a bank account, it's about crafting the life you envision. Did you find this video helpful? If this guide lit the spark for your wealth journey, then burn that like button and don't forget to subscribe to our channel for more tips on how you can reach your financial goals. Until next time, we are Foxfire Finance and keep that fire burning.